Oh, this time I brought you a simple strategy, very simple strategy that you can use to trade NASDAQ and US30 during the New York session. So that's the purpose of this session, to equip you with enough skill, with an easy concept that you can actually use to make money, right? So on your watch list, I would actually like you to add these two instruments, right? US 100, right? Add US 100, right? It's best that you take it from this broker, currency.com, right? If you're using a trading view, right? So the same with US30, just take it from the same broker, right? It will give you the best of the charts, right? Okay, so let's go straight into the strategy and get to learn. But before we get into that, let's actually set up a few things that we'll actually want to use in our trading, right? So come here on the time so that we set our time zone to our liking, right? I believe if you just set it to the time zone that you actually use depending with your region, right? Here in Zimbabwe, we just use this UTC plus 2 Johannesburg, right? You can just set your time to that, right? If you're in New York, you just set it to New York. In whatever you're in Rome, just set it to Rome, right? Whatever region that you're trading from, just set it to that time so that you understand the relationship to your time zones, right? Then the other thing we can also add, just come here on the times that we have at the bottom there, right? Just add your session breaks, right? So this option will actually divide your chart into days, right? So that you can see where your day is starting and where the day is ending, right? It's kind of helpful mostly on this concept, right? Then we are also going to add an indicator that we'll be using. I've explained some setups that we put on this indicator, right? You just come here on the indicator, you just search FXN, right? This indicator is the one that we're going to use to spot our sessions, right? So just select this on Asian session range, copy with updated H or whatever, right? Then you just put it there, right? So you come to this section, right? So that we actually change some settings on our indicator, right? So we come on style, then on style you are going to come on the New York session, the option for New York session, fill the New York arrange color, right? On this one, maybe just put this color, you can increase its opacity, right? You can see it from there when you're increasing the opacity so that you can see. You can put any color that you like, right? But this is the color of my liking, right? Okay, then you come on the labels and lines and highlight these two items. We don't want any of those. All right, I think it's all good. Then you say okay, right? So these are the settings that we want on this strategy, right? Then if you have subscribed your trading view, right, you can actually save the indicator here. Maybe we say NAS 100 US30, so that you know that it's a template for these two. Then you just save it, right? Then you just save it, right? But if you haven't paid, I think they allow you only to save once, only a single template, right? You just use it like that. All right, so this is what we want. This is our template. This is the template that we're going to be using on these two instruments only, right? This strategy is applicable on US30 and NAS 100. If you want to trade NASDAQ and US30, right, these are indices, right, that actually has volume, right, during the New York session. So we're going to be trading these instruments only during the New York session, right? If you look at the sessions, you can actually refer to the sessions indicator, the video that is written session indicator under my channel, right? So that you understand this session, right? So the first session that we have is the Asian session, then the London session, then we have the New York, right? So we're going to be taking our trades during the New York session, right? So it makes the strategy easy, right? When you get to understand it, you can actually remove these indicators, then you just work with your times, right? But I believe it's quite easy if you just have these indicators and if you just use these indicators, right? So let's go straight to it, right? You don't necessarily have to use M15, right? You can stick to M5 and M1 for this strategy, right? Those lower time frames, M5 and M1 for this strategy. Those are the best times that you can actually focus on as we are using this strategy, right? So the first thing that you have to understand on this strategy is that our chart is going to give us is going to give us this. The first box that we're going to get, it's what? It's an Asian session box, right? Then we're going to get a what? We're going to get a London session box, right? So what's happening with these regions is for the very instruments that we are trading, right? NASDAQ and US30, they have volume only during the what? Only during the New York session. During the Asian and the London session, there is no volume there. So we're not going to be trading those instruments during those sessions. So what it means now, it means that above the highs of the Asian session and the London session, we have what we call liquidity, right? So above these two sessions, there is liquidity, right? So we have liquidity pools, right? Sales, buy stops liquidity, sell stops liquidity, right? So we consider those highs as liquidity pools. So if you're going to have our price moving within those sessions like this, right, we know that that's just liquidity that the market is creating, right? So what usually happens now, right, is the market moves into the New York session, usually at the open of the New York session, right, or between the gap time, the gap between the London and the New York session. Price is going to manipulate or is going to grab this liquidity that has been created during the Asian session and the London session, right? So at times you're going to get price moving to the upside like this. Let me just end that one there, right? So you're going to have your price moving maybe to the upside like that, right? They move to the upside like that, grab that liquidity, come back into the what? Into this zone, right? So it means this movement, we have grabbed liquidity, the buy stops liquidity, right? If we are going to get a move to the downside, it simply means the same, right? We get a move to the downside, it grabs liquidity, right? So on this concept, it's either it's going to grab liquidity only on the London session or it grabs on both sessions. But what we want to see is, did they break? We want to see them break. We want to see them taking, we want to see them taking liquidity either from the low of the London session or the low of the New York of the Asian session, or the high of the London session or the high of the what? Asian session, right? Any of those highs or the lows, the moment we see them taking liquidity, they might not take the liquidity that is created during Asian session. They just take the one that is created during what? During London session. Then our setup or our concept will be valid, right? But what we want to see is to see them grabbing liquidity on either of the what? Of the sessions. So the setup is going to come like this. This is what we're going to expect, right? They move to the upside, grab liquidity, right, on that high, right? Remember, when they are moving, they're going to move in some kind of waves like that. You are going to apply the concept that I just shared with you on the previous two videos that I shared on this session, right? You can just follow the dates and get to understand them, right? So the moment they move above this high grabbing liquidity, the next thing that we are focusing on these lows that they have created. You want to see your price coming back into the zone, right? So that we can refer these to as a stopper. They come back into the zone, they break this low, right? This is on M5 and M1, right? Then they come back to the extreme order block or the extreme imbalance or FVG. The moment they close that, we are going to take our entries and we're going to make our money, right? And we are going to hold our trades up to the end of the session, right? There are two rules to the take profits, right? Either you hold the trade to the end of the New York session, right? Or you hold your trade up to a risk reward ratio of 1:2. If you had risked 30 pips, you're going to hold till you make 60 pips. Then you leave that trade. I believe this is very, very simple. I believe this is very, very simple, right? At times you're going to realize that your Asian session might fall within the range of the might just fall within the range of the London session, right? Then no problem. No problem. You'll see that on the examples that I'm going to show you, right? The concept just applies like that. If they take liquidity on any of the highs of either the Asian session and the London session, then we consider that setup, right? No need of a higher time frame bias, no need of that. The side that they take the liquidity, we look for our pattern. The moment we see our choch, right? If you didn't understand the concept of the choch, just refer to those concepts that they're on this channel, right? We're just going to look for our first choch after taking that liquidity, right? You do your thorough investigation to see if this was a liquidity grab. After that, you consider your trades and you can take your trades and we are good to go. So this is going to happen in the what? In the London session. Okay, so on NASDAQ here, right? Our day actually started here, right? So what it means that we have this Asian session low, we have this London session high, then we have Asian session high, London session low, and London session high, right? So it means that below those lows and the highs, what we have there is liquidity, like I have explained, right? We have liquidity sitting here, we have liquidity sitting here, right? But this one has been already taken by the move that we can see that they've moved to the upside, right? So we have liquidity that is still sitting above the London session high. Then we also have some liquidity that is still sitting below the London session low, right? So the liquidity that we can actually focus on is this liquidity, that liquidity, and that liquidity, right? So these are our liquidity pools of interest that we can use for our setups, right? So we're going to wait for a pattern, right? We're going to wait for our pattern, right? That might come to the high of that session. If we get our choch there, we can get to trade, right? If you don't get it, there is no trade, right? Also, if they come below the low of the London session, then we get our pattern there, we can trade, right? Or the third option, right? So we have three options to this one, right? If our price manages to push fast lower than the low of the Asian session, then we get our pattern there, our choch, then we can take buys from there. So either we're going to get a sell from the liquidity of that high, buy from the liquidity of the London session, a buy from the liquidity of the Asian session, right? These are our expectations today for this US 100, and we're going to play and see what we can get out of it, right? So what happens first is what we work with, right? It's a very easy strategy. Okay, so let me bring back my liquidity signs. The dollar sign, they just represent liquidity for me. Okay, so this is it. So let's play and see what price had to offer there. Let's see what our price had to offer there. All right. If you look at it, our price is actually giving us a break to the upside. This is liquidity that is being taken to the upside, right? So we're going to wait patiently to see if we can get a choch there, right? To see if we can get a choch there, right? To see our things clearly, at least we have to go to what? To M1, then we can map our setup, right? If we go to M1, you can clearly see that there is a low that they've actually broke. They've broken this low. They've broken that low, right? Then if you consider the extreme imbalance, right? The extreme imbalance is actually here. This is our extreme imbalance, right? So it means that from the high of that extreme imbalance going upwards, we can get a sell trade. Then we just put our stop loss slightly above that high, like this. Then we target a risk reward ratio 1:2. If it moves from here to just that, we'll have made our 1:2 risk reward ratio, right? But we can as well extend it, right? Because when you take these trades, we should hold it up to and until the end of the New York session, right? We hold the trades up to and until the end of the New York session if you don't want to use risk reward ratios as your targets. Because at times on NASDAQ Invested, we get huge moves, right? So on this one, let's just wait and see if we are tapped, if our zone gets tapped and we get into the trade, right? So let's just play and see what happened on this one. Okay, so our price actually moved. Our price is actually moving. Oh, they've also gone to this side, right? Your eyes should be wide open, right? They've also come to the low of the Asian session, right? Like that, the low of the Asian session, and we can clearly see that they've broken the low of the Asian session, right? So it means they're now taking this liquidity at the low of the London session, not the Asian session. The low of the Asian session is still intact, is still there, right? They haven't taken the liquidity there, right? But like we said, we might actually get our setup here, right? So they're now taking that liquidity. So we wait patiently and see what they're going to do there. If they're going to give us a choch on M1, right? On M1. Okay, if you look clearly, this is what is happening, right? They've actually created a high. So we mark that high, right? If they break that, then we know that we're about to get a choch. Oh, they've broken it, right? So this is now a choch. It means we can actually map a setup, right? So we've gotten a choch here. I know you understand what a choch is. So we've gotten a choch here, right? So after getting our choch here, it means that we look at our imbalances that we have, right? When the price is now turning and coming down, right? If you look here, there's some imbalance there. There's some imbalance there, right? Then we also have some imbalance that is sitting right there, because price didn't come all the way to mitigate this one. So with these two zones of imbalances, I believe in the discounted zones, right? I explained the concepts of discount. Let's ignore this a little bit, right? Price, if it comes there, we're going to use that setup, right? I explained the concept of discount zones, right? So we only buy in the discounted zones, right? So let's now do our projections for these trades, right? So below this imbalance, right, we can actually get a trade from there, right, all the way to this low, slightly below that low. That's our trade, right? Then we can map it to the upside like that, right? Then we could also get a buy right here, right? So below that imbalance, can as well map a trade, since this one might mitigate it first, right? Then we'll project it like that, right? So we have two buy zones that we can actually use today according to what we have seen, right? So our entries usually come below the imbalance. If you see imbalance or inefficiency or FVG, right, the order block that is below that is highly likely going to be used, right? So we focus on it at that much, right? So this is now our projections for today on us, right? Let's play and see how it all goes. All right. Also remember, we don't just enter the trades by the reason that they've tapped into our zone, right? We want to see some confirmations, right? So if you look at this one, they've tapped into the zone like that. You see that? So wait to see some sort of rejections, right? Also, if you look at this risk, it's very small. If you want, you can just risk to this zone. If you want as well, you can just put it below this low, because they might want to just close that, right? So you can take this whole range as your entry, right? And they have another one slightly lower like that as your entry. That is if your pips are small. But if you want smaller risk, just leave it there like that, right? It's your decision that you make. Remember, this is M1, so our risk will be very, very small. So this is M1 time frame, right? We were taking our entries, right? So let's just play, right? At least you're seeing that it's rejecting, right? It started rejecting here, right? There was a rejection there, then it moved up, right? So the moment you see your rejections inside your zones, you just press the trade. The first bullish candlestick was enough for a rejection. You would actually take a trade, right? Then let's play and see how this guy actually moved, right? Oh, they came back to the zone. It's more like a consolidation, right? Then the other thing, if they also move into your profits for a risk-reward ratio of 1:2, like let me check, this was 1:2 or somewhere there. We look at this 2, right? Risk-reward ratio 2. If they hit that, you are allowed to move your stop loss maybe to break even. Then you just hold your trade, right? Let me just extend this one because I think my price is already going, so that I do this. All right, let's see how. All right, they've already hit a risk-reward ratio of 1:2, so you can actually move your stop loss to break even if you want. If the risk, if you're cool with the risk, right? Because at times price can tap that, then come back to the entry. So if you're cool with this risk, you can just leave with your stop loss, accept the loss, then you just let the trade run like that. For now, let's remove this one because I think price is already moving. We have achieved our first target, right? Then you can always stretch it to those highs, right? We hold the trades to the end of the what? To the end of the session, right? Hope you saw how we took the trade on this choch, right? They came to that, closed the imbalance, mitigated that order block, then we are on the move, right? They just left this one, right? Let's see why they left that one. If you move to M5, you're going to realize that there was this order block, right? This one was already tapped. They had already rejected and tapped it, right? So there was no unmitigated order block. So this was the only unmitigated order block on M5. This one was only the unmitigated order block. So that's why they came and just tested that, and they are moving. So on M5, the only unmitigated order block was this one. So the range here was good, right? But on M1, that's why we're seeing that there is a lower order block, right? So you should weigh those options so that you don't miss any of the trades, right? Either on this strategy or any other strategies that I have actually taught you, right? Let's just play this and see how this trade actually moved for today. So it just went straight into profits. Then this is how it played out. Let's wait until the London session ended, right? Because that's where we can actually close our full profits and just leave, right? If you don't want to use the targets, right? Okay, so as you can see, this is where our New York session ended, where this shading is ending, right? So you can just consider this as your TP. If you didn't want to use the risk-reward ratios, right? So this is your final TP where this session closes, right? So we release something like 22 pips, right? We take it as 22 pips, release something like 22 pips, right, to make 90 pips, right? And the risk reward ratio is 3, almost 4, right? That's 4, 3.99, that's 4, 1:4. Risking $1 to make $4. That was just too good, right? So this was today. It actually happened today. If you look at the date, right, on your calendar, right? So let's go to the previous day, that is yesterday, and see how this concept also applied, right? So in terms of this trade, it never got to our entry zone, so we never got to sell here, right? So it just remains like that. And our setup worked on the London session low, where they took the liquidity. They just took the liquidity of the London session, then they moved. This was our entry. Easy trading strategy, right? So, thank you very much, guys, for your time. I'll continue with this session. I'll continue with this lesson, right, on the next video that I'll have. Thank you for your continuous support. See you on the next episode of this.